Good day to one and all. This is Dr. Sivaraman of iknowinvestors.com. So I'll be presenting this monthly twin webinar, which I give once in a month, tracking the forex market together. So it is a twin webinar consisting of part 1 and part 2. So part 1, I am giving it between 9 and 9:45 GMT. Part 2, I will present it between 14 and 14:45 GMT on 18th of February, that is today. So it is basically a simple market tracking technique and effective trading strategy. So these two are very vital in order to make consistent earning from that of the market. So basically, if you want to track the market, you need three important elements. Namely, the derived forecast. Whether you use technical analysis or fundamental analysis or any other type of analysis, we will be able to give a projection to that of the market. And that will be the forecast, or it will be the expectations. So we try to view the market with different perspectives and see that probably euro can go up or euro can come down. Then we are in a position to take an appropriate position. Where exactly we can enter into the market, where exactly we can exit from that other market. So these things are being determined. Then afterwards we try to execute the trade. Then what happens when you execute the trade, we also use the stop to limit the risk, because we always find there is a gap between the derived forecast and the actual market. In the derived forecast, we might come across that euro can go up, but in the actual market, euro can make a small dip and then later on go up. In that process, our stop would have been hit. Then we decide not to keep the stop so that market is making the move as per our expectations, and so we avoid keeping stop, or some of the traders avoid keeping stop. What happens next time? We expect euro to go up, then we try to enter into the market and see that euro makes a small dip, so we decide not to keep any stop so that euro will go up as per that of the technical analysis. Then afterwards we find that euro started coming down. Then we become helpless because the stop was not there earlier, so the loss increases. Once the loss increases, we go in for the crisis management of trying to close the position with a minimal loss. But nobody will be able to push the market on the upside according to your requirement. Only the market has to make its own move. So till such time, what you have to do it. So in order to get rid of all such uncertainties and the problems, we have to give equal weightage to that of the forecast as well as the trading strategy, so that you'll be able to limit the risk and maximize the reward by using a trading strategy. But if you see, predominant of the analyst give importance to that of the forecast, but not the trading strategies. And they simply say that use the stop to limit the risk. But I wanted to go one step further and try to find out how exactly that stop can be replaced with a hedging order. And in the event if we use the hedging order, how effectively we'll be able to earn during the different types of moves in the market. In that process, I had derived the various type of strategic trading techniques which could be deployed along with that of the forecast. Besides, we envisage, based on any statistical study, that euro can go up or come down. But that will be a theoretical derivation without any time frame. So euro may go up, but not immediately. It may make another 50-60 pips drop, and later on it may go up. Similarly, when exactly the target is going to be achieved, the time frame is not calculated using the normal conventional technical analysis. So with this quest, I was developing a statistical algorithm and with which I am in a position to give the expected market moves and also the time frame. So when exactly we'll be able to see the low, when we are likely to see the high, and what sort of trade we'll be able to do based on the derived forecast. But still, in order to fine tune it, because even if your analysis is 99% true and or it is being seen in the market, still there is an element of 1%. And in that process, what happened? If you have taken a wrong trade during that particular error time frame, then we may reject the algorithm straight away. So in order to avoid that, I have also developed the market reading technique. That is, in order to fine tune the forecast. So that also I will explain to you. With the help of the forecast and the market reading, one should be in a position to take appropriate decision or perceive correctly whether euro has to go up or come down. Then still, the element of error, we have to limit it because we are trying to trade with our hard-earned money. We cannot just like that speculate. So in that, we have to have an effective trading strategy. Thereby, we limit the risk, and once the profit is seen, we try to maximize the profit without becoming addicted to trading. Now, with regard to that of the forecast, I will try to display the expected market moves for today. This I normally give it during that of the Asian session live market analysis on Mondays, and there I display the expected market moves that derived forecast for the entire week. Today we are on 18th, so the market is expected to make a swing and slide during that of the Japanese session, and we have seen that GBP has made a slide, but euro is still holding, and they are trying to hold near that of the high and just breached, etc., the high in anticipation of the data release, etc. So we will see how exactly one can take a trade. It is because of the euro data, they just made a brief upward stop. And in the case of GBP, they just made a small dip. Then today it is expected to make a swing and slide during Japanese session. We are in European session. So during the European session, they are expected to make a swing and firm up move. So small firming up move could be seen in some pairs, especially euro and GBP are supposed to do, but now they are doing the contrarian move. Euro is showing positive net change, GBP is showing negative net change. In order to handle euro GBP cross, they are trying to gain some levels in the case of euro GBP cross before making further drop. So euro GBP has from that of 0.8161, it has come to 0.8224. They gained the levels because they are holding euro in positive net change, GBP in negative net change. Then later on, they are expected to make the slide. So accordingly, we'll take the trading decision after doing the market trading technique. So they are expected to swing and firm up during the European session, but the firming will be very nominal. So it is not advisable to do a buy and sell trade in the case of euro or GBP there. And instead, we will try to take an appropriate sell positions so that we will be able to take profit. So that we will try to do it with the help of the market reading. So first of all, the forecast I have given it. Then afterwards, we will go in for the market reading technique. So in the market reading technique, we need to know the market timings. Okay. The market timing, namely, we are in the European session. It starts by 8 GMT. 8 to 9:30 GMT is the early session, and 12 to 12:30 to 14 GMT is the late session. In between is called mid session. So each session is a naturally occurring sessions, and this is how the players follow the sessions. And each session, you come across the early, mid, and the late session, and in between the sessions, you come across a gap time during which they make the false move. Those who have been tracking me in the earlier webinars might be aware of all the details, and those who have joined fresh, I'm trying to explain to them. So in the case of euro, Japanese, European, and US sessions, you find the times are followed these are all the timings followed by that of the players. So 8 to 14 GMT is the European session. So the first webinar, part 1, is by 9 GMT. Then part 2 will be start of the gap time, 14 GMT up to 14:45 GMT, 15 minutes after the start of the US session. So we'll try to see what sort of trades we can do it during this particular time frame. So I have been explaining that the early session they handle the majors and the mid sessions they handle the crosses. Besides, we need to use the live market code page in order to track the market. And the live market code page shows the 4 majors and 2 commodity pairs, and also the high and the low set from start of the day, and also the net change, that is the time, the level. It shows variation from that of the previous day close. So Euro has gained about 14 pips from that of yesterday US session close. USDN has gained about 49 pips from that of yesterday's close. GBP has lost about 25 pips from that of 27 pips from that of yesterday's close. So we try to find out with the help of the net change from the previous day how far the market has moved. So Euro has gained all along from that of the Japanese session, then start of the European session. It has gained only about 14 pips, whereas the yen has gained about 52 pips. So that is how we come across what is the current scenario. And this is very essential for us to do the market reading, the live market code page. We don't follow any of the charts or any of the other statistical analysis. We only use the chart and try to do a very simple type of analysis which can be done in fraction of a second, so that we'll be able to take quickly a decision to enter and exit out of the market. So for that, the timing is important. So as I explained that the early and the late sessions, they handle the majors. So we are in the early session by 9 GMT. So we'll try to focus on the majors, try to take some positions there. Now for that, what we do is we note down the initial lows and the highs around 3:30 GMT from the start of the day. They set initial low and the high in all the 4 majors and 2 commodity pairs. The high and the low, they set it. Then afterwards, they try to swing near that of the high, or swing near that of the low, or swing below that of the low, or swing above that of the initial high, etc. These are all the possible moves. So we need to find out with the help of where they are staying and what sort of move they have done it to identify what is going to be the next move. Because we expect the forecast. The forecast is the one we should be able to say, okay, Euro has to drop from now, or Euro has to rise from now. That is forecast. So it is not that in the event Euro drops, it can come to 1.3650. In the event Euro goes up, it will be 1.3750. Anybody can say that. Any level we can imagine for that matter. And we can say that statistically it is derived. But unless and otherwise we say that whether it can go up or come down at a given time, that is not going to be really helpful for traders. And we can always give the comments about the market later on, the market commentary. And after the move, we can say that there is a Fibonacci retracement of 38.8%, and subsequently market has gone up. But will you be able to say beforehand whether the market is going to retrace on the downside before making further upward move? So these are all the vital questions, and people shy away asking such questions in the market. But I asked myself, and then later on derived this particular algorithm. Now, after comparing the market with that of the initial lows, the highs, we'll be able to find out what sort of moves they intend to do. Now, in the case of Euro, 1.3695 is the low, which is still not breached, whereas the high was 1.3727. The initial high was 1.3712, and they have just gone above that of the high by about 15 pips, and they are holding above that for more than 30 minutes, and now they have started coming down. So, if they come below that of 1.3712 in less than 30 minutes, we understand it was a brief upward stop before making a slide, because we know that there's going to be a data release by 9:30 GMT. CPI is expected. So before that, they make upward stop. And in the case of USD yen, before that of the BOE statement, they made a quick downward stop and then subsequently made the rise. So when they make the stop ends beforehand, we understand, okay, irrespective of the data, what is going to be released, what they intend to do it. So we can just read their mind, and that is market reading. So we find out whether they had done the stop end or an extended move or an intentional move on the upside or on the downside. In the case of GBP, 1.6710 was the initial low and 1.6730 was the initial high. They made a brief 12 pips upward stop in the case of GBP during that of the Euro-Japanese session, and then subsequently they breached 67.10 and come below. Still they are staying below that, and they are staying below that for more than 30 minutes from the start of the European session. So they are likely to continue the downward move since they are holding it below. For the data which is going to be released around 10 GMT, they could come up to that of the initial high, initial low, and then start making the slide. We will be able to see that. So that is a possibility. And since they have made an the intentional move, slow downward move, they are expected to continue it. And for the data release, they will come up to that of the initial low, 1.6710 or 1.6705 they may come up to, and then start making further slide after the data release. So we are able to understand with the help of the initial lows and the highs what they are trying to do it in the market. Then in the case of USD yen, 101.88 was the initial low. They breached and came down to 101.79 and went up and breached the high. And that is exactly the downward stop and followed by that of the extended move on the upside from 102 to 102.18, went up to 102.75 and still holding above that of the initial high. And there is a great chance for USD yen to go up further. So we are able to judge with the help of the initial lows and the highs, comparing to that of the current market condition. We try to find out what sort of trades we can do it. Now, in the case of CHF, 89.08 is the new low, 89.10 was the low, and they just made a brief downward stop and then they just made a 1 pip upward stop. And as I explained many times, when the spread is less than 40 pips between the high and the low, it is better to avoid taking any positions in such currencies. And where they have made more than 40 pips spread, we can initiate the trade so that we will be able to really see some good moves in the market. Otherwise, we will get struck with 1 or 2 pips profit or loss, and we find that our money is not really working. So we have to identify a currency pair which has made 40 pips spread between the high and the low before, in the case of majors, before taking a position, either a higher level sell or a lower level buy. And in the case of crosses, they should have made at least 70 pips spread between the high and the low. Only then we can take positions. Otherwise, the time taken to close the trade will be longer and it may test our patience. Then in the case of USD CAD, 1.0947 is the low. They have not breached it. 1.0965 is the high. They have breached the high and went up to 1.0977 and come below that of 1.0965. So they made an upward stop and they are likely to make a further downward move. We can take a sell there. Then in the case of Aussie, already they have made that drop and they went up to 0.9081 as an upward stop and during the data release during that of the Asian session, you would have noticed that they made a quick upward stop for the Australian data, and then subsequently they started making the slide and come below, and now they have breached the low. 0.9016 is the initial low. They have breached and gone below. So they are likely to make an intentional move on the downside. So we'll be doing mostly the technical trade today, as I explained that So these are all the market timings. So we note down the initial lows and the highs in 4 majors and 2 commodity pairs with the help of the live market quote page around 3:30 GMT. What are the initial lows and the highs, and also the net change in 4 majors and 2 commodity pairs. Then also we note down the net change from the previous day close, how exactly they are faring with the market. Whether they are simply holding in order to make a drop, or they are trying to make a stop on the upside during start of the session, or they wanted to make an extended move for 2 hours above that of the initial high or below that of the initial low, or they wanted to make an intentional move. So those types of moves are explained here. The stop ones and the false moves happen in less than 30 minutes. During start of the session and close of the session, during early and the late session, they make a move above that of the initial high or the low for 15 to 25 pips and reverse in less than 30 minutes. False move is the one they go up to that of the low and reverse, or up to that of the high and reverse. That is the only difference between false move and that of the stop move. Then the extended move is always a quick move, and they alternate with that of the intentional move, which is a slow move. So extended move, quickly they go and hit the stops and stay there for 2 hours. And yesterday during that of the Japanese session, you would have noticed in the case of GBP, they went up quickly to 1.6823, and then in a matter of about 2 hours, they reversed and come below, started making the slide. So that sort of extended move, they do it before making an intentional move on the downside. So now you see that GBP is making an intentional move on the downside. But everybody is bullish. So they create the market sentiment and act against that of the traders. That's what we need to understand. So what is visible in the market is not true, according to me. Then swings are the one, they make a move near that of the high for some time, or drag, or near that of the low for some time. Just consolidation near that of the high or near that of the low. And they are all swings. Or sometimes they do between the low and the high. In the case of yen, you would have noticed that they made a quick drop and a quick rise and a quick drop. And they are all swings without breaching the high or the low. So these are all the types of moves they alternate and do every day. So always they make an extended move before the intentional move. After the intentional move, when the new session starts, they make a stop point. During the gap time, they make false move. And during that of the data release time, they make a false move. So if you identify what move they are going to definitely do it, then your trade ideas following the market timing should really work very well. And consistently you should be able to earn money from the other market. Then, that is with regard to the entry and the exit. Now besides, okay, we do all the studies quickly and try to take an entry and the exit. But in case if the market goes against, what are the plans I have? See, instead of doing the crisis management, we go in for a contingency plan. So I am taking a buy, sell position in the case of euro or sell position in the case of GBP. They even because of the data release or anything, they suddenly reverse the market against me. Okay, what are the plans? See, simply I can say that I got a stop. Fine. If you keep stop like that for 2-3 occasions, then you find that most of the stops are hit, and then you take a decision. Okay, let the market settle. Later on, I enter into the market. This is what many of the traders say. Okay, during non-farm payroll or during any of the prime data release, are you willing to take trade? No. I want to wait for the market nice to settle down. Then later on, I enter. But during that data release, you come across market is really making about 50 to 75 pip swing. So if you make a right entry, you will be able to grab a good profit in just about 5-10 minutes. But we are afraid because we used only the stop. So we are afraid that stop might be hit. And if you want to trade without a stop, in case if they make a big reverse, and my margin might be simply eroded. And some people have got the tendency to take 2-3 lots positions and say that, okay, one lot I'll book partial profit, another lot I'll just extend and book some more profit, The third one, I'll do position trade. But if they hit that stop, then all the three position stops will be hit. Nobody address it. And so it is easy to give theoretically so many strategies, but practically we have to see how difficult it is, whether our mind will be able to consistently accept the stops being triggered. So instead, we can use the hedging order. If it is hedged, we will be holding, which is called as an entry stop, or which is called as a buy stop or the sell stop in the MetaTrader 4 platform. And there, buy stop or sell stop, you can use it. For a sell position, you can use a buy stop. For a buy position, you can use the sell stop, so that if it is filled, both the positions will be there in the platform. And both the positions you can handle separately. So instead of a stop for 30 pips, you can use the hedge for 30 pips. And if it is hedged, and we can watch whether the hedging is filled during stop end, or during false move, or during extended move, or during intentional move. These are all the types of moves. So if you identify that, okay, the stop was filled during stop end, I simply close the hedge and keep another hedge order. Then I will see that the original position is making profit. I have not missed the trade. Then, in the event if they have filled it during extended move, okay, I'll wait for 2 hours, keep stop at entry in the hedge, and after 2 hours they will start making my expected move. Then let them make the move on the downside. I'll book profit. The hedge is closed. The stop at entry. I'll keep another hedge order to limit the risk of 20-30 pips away from the market. I'll let them drop, and I'll keep stop at entry in my sell position and book profit on the downside, because it is going to be an intentional move for 2 sessions on the start of the third session. So till such time, they will slowly drop, and there is a possibility that they can drop about 100 to 150 pips or rise about 100 to 150 pips during the intentional move time. So we are able to judge when to close the hedge, provided we are able to read the type of moves they are doing it in the market correctly. And similarly, exit. So during the intentional move, we'll try to trade. And if the intention is they have made an extended move on the upside, okay, I have prepared to take a sell. The next move is going to be opposite the intentional move on the downside, and I'll keep stop at entry and try to wait for 2 sessions at the start of the third session and book maximum profit out of that. So there is no luck involved in that, and we can straight away measure it, and it will be around 100 to 150 pips on the upside or the downside. So in between, they don't do anything. So wait for the time the second session and the third session start. When they make a quick reversal move, we try to book profit. On the upside, they quickly make a rise and then reverse. On the downside, they quickly drop and reverse. So that time we try to close the position. So we are able to judge that what is going to be the next move. Accordingly, we handle the hedge, so that instead of stop, if we use the hedge, we are not losing the position. We can close the hedge if needed with stop at entry or with 5 pips loss or 10 pips loss sometimes. And if the market is showing profit in the hedging, suppose we had expected a swing on the downside and suddenly they made an upward move, fine, I am not exposing my position straight away. It is hedged with 30 pips and only 30 pips is being blocked and the market has zoomed upward. Doesn't matter. I'll keep stop at entry, let them finish all the upward move and come down. I'll continue my trading. That is one possibility. The other possibility is keep stop at entry in the hedging and see that the upward extended move or the intentional move is over. After that, they will make an extended move as an alternative move. So once that is over, I'll book profit on the hedge and then take another sell position. During the downside, I'll close both the sell positions below their average and exit out of the positions. So there is no fear. And if you simply look into the chart, okay, Euro has got a potential to go to 1.38, then you don't feel like taking position at 1.3716 or 1.3723 and things like that. Because you expect it to go out to 1.38, then you will simply say that let Euro go to 1.3860, then I'll take a sell. Fine. You wait for 2-3 days. And probably after a week, euro comes to 1.3680. At that time, everybody says that it has got a potential to go to 1.42, so we wait. So when we have planned earlier that it can come to 1.38 and take a sell, and once actually we see in the market, we don't feel like taking the position. That is because of the market fear. Market fear comes because of the uncertainty. How the uncertainty comes? Because we are used to see the surprise in the market. So when you see surprise, that means what you expected in the market has moved against your expectation. It becomes a surprise. You stun your brain thinking ability. So if you read the type of moves, it will not be a surprise. I was telling you that they made a downward stop and I do not know anything about the economic conditions of Japan, but I was telling everybody that they wanted to rise USD yen. So they quickly gained the levels because they are cunning. That is the only way they can make money from that other market. So they make a quick downward stop and then start gaining the levels for the BOE press conference. So that is how they make the move. So we have to identify what move they are trying to do it in order to make the opposite of it. And the move, which is a false move, will always be a quick move. So we can easily identify. I think I have been talking already. They have started making the moves in the market. So anyhow, these informations are vital rather than simply taking the positions. Then exit. We have to identify the type of moves and then try to take the exit of the positions. So these are all very vital in the market. The entry and the exit, depending upon the type of move. And just like that, you should not ask somebody, can I take a buy here? Can I take a sell here? And ask somebody, if somebody says that, okay, you take a buy there, then you take a buy and keep stop, and that stop is hit. Okay, I do not want to follow A, let me follow B. He is giving a call, okay, fine. Can I take a sell? Okay, you take a sell. Then afterwards, it makes about 20 pips profit. You appreciate him greatly and say that he is from heaven. Then the second call he gives that he says that, okay, buy there, the market continues to drop. You say that, no, he is good, no good, and go to the third one. So that means you don't have your own sense of discretion and you are depending upon somebody. And if somebody says and if the call becomes right, then you intend to follow it for some time until his call becomes bad. Then later on you jump to third person. And endlessly we will be circling around. But if you think that he is also yet another human like me, and he has got the thinking ability, I do have the thinking ability and the reasoning ability. And if it is a common sense, I should be able to really do it on my own. Where is the necessity for me to follow others? So if you are able to understand that the market is following the common sense, then we will be able to do the right trade. And instead, if we think that common sense is just opposite of technical analysis, and technical analysis is the one which is going to give the real perception of the market, it will give one or two calls, then the reversal or stop and we miss it. So ultimately, what is more important, the forecast is 50% in trading. Then the trading strategy is 50%. Only then the trade becomes successful. And I was giving the forecast on Monday that it is going to be the mid-month reversal. And people might be surprised to see that GBP is just melting down all along. So this is what I explained. If it is hedged, how exactly you can wait for 30 minutes, find out what sort of move it is, and then accordingly take the positions. Okay, what trade left out. Now in the case of Euro, the spread is less than 40 pips, so no entry. Because we can enter long. All along yesterday, they have been holding around 1.37 as if it is the prime area in which Euro has to be guarded. And later on, they are expected to make a very big drop, more than that of GBP. We'll be able to see that. And in the case of yen, they made more than 40 pips, and they come down to that of the initial low, 102.18, still holding above. So we will try to keep a buy limit order 10 pips below that of the market. Okay, with at least 5 pips I'll keep, because market is really subdued, so probably I'll just keep it around 40, 39. Okay. Why I'm keeping a buy limit? See, you know that when you watch the market, they have to kill the time till 14 GMT. And in between the data release, afterwards, they have to continue to swing, buy circular trades, and induce the traders to commit some positions. And later on, only they can reverse the market. So until such time the traders continue to commit positions, there is no big point in making a big moves in the market. So they have to create the feel the market has to really make a downward move or the upward move, and then later on they will try to make the opposite of the market expectations. So till such time, we will find that the players have to really make small swings. So in the process, if you keep about 5 to 10 pips below that of the market, depending upon the momentum. If the momentum is good, you can keep 10 pips below the market, the buy limit, and otherwise at least 5 pips so that we have a definite fill. And if it is not filled, we can always go and buy it at a higher level. That means if somebody has taken a sell here, which he was not in a position to book profit, he will certainly come for short covering. During the dip, people would have thought that USDN might go down further down. So in that process, they would have taken a sell. So that is what it reflects. So always think objectively when you are taking positions. Okay, I'm trying to take a buy, and somebody has taken a sell at the same level. And what is going to be his mindset? And what is going to be my mindset? And if you analyze it objectively, you'll be able to find whether who will come for the short covering first or long liquidation first. So there is no one need to tell you that this is what's going to happen in the market. You yourself will be able to perceive it using simple logics. So when they gained the GBP level to 1.68, and people might be wondering, because all along I have been doing buy and sell trade in the case of Euro and GBP, but I am giving sell and buy calls. So you might be surprised. But when they took it up to 1.68, who was the first person to come and buy it at 1.68? Obviously the short sellers. Because no genuine person will try to buy there expecting another 100 pips rise to, book profit. Because ultimately we enter into the market aiming some profit. It is not that we have a fashion for any currency pair. So there is no sentimental attachment to any currency pair. And if they are at the sell level, you have to take a sell. If they are at the buy level, you can take a buy. And that perception varies from time to time. That we need to understand. So about a week back, 102.43 was a sell level in the case of USDN. But now 102.39 is a buy level in the case of USDN. See, now they are making a dip. So instead of buying at the market, if you keep a small order, 5 pips or 10 pips below, depending upon the momentum, we should be able to really make some good money from the market. Okay. Now, in the case of GBP, they are holding below that of 1.6710. So I will try to keep a sell limit order. $1.6710. That is the initial low. Then for this, we have to keep the hedge order. So for a buy limit, I will keep a sell stop. $30 pips below, and for the sell limit, I'll keep a buy stop. $30 pips away from that of the entry. So Euro has not made a 40 pip spread. CHF has not made a 40 pip spread. Here again, not a big spread. And in the case of Aussie, 1.9010 was the initial low. So I'll try to keep sell limit 0.9010, because when GBP trying to make a small reaction for the data release, they could make a small firming up in the case of Aussie also. Okay. So these are all the 3 trades I envisage, but they are nothing but the limit orders. Still, I have not got to, okay, now this has become a position. So USDN has become a position, buy position. So we will see whether they are filling the other ones, and accordingly we will try to take the trading decisions. So ultimately, after taking the positions, we should try to close it within the session, because the trend set in a session will continue in this particular session. And between the sessions, you come across a gap time, they will make a false move. And during the start of the session, they may make a stop end. And then afterwards, they will set the trend in the next session. That need not be the same as that of the previous session. Unless and otherwise, it is an intentional move. If it is an intentional move on the downside, then the trend is down during European, then US session also they will continue. And the next day, Japanese session, they will make a quick downward move and reverse it and make an extended move on the upside. And so we need to understand what move it is. And then we can continue to hold the position till end of that particular move. Okay. I think there is only 3 minutes left out if there are questions. So these are all the trades I have planned. I explained to you on what basis I am taking these positions. I want your understanding of the market need to be very, very simple, even though it appears very complicated market with so much of data release, so much of economic conditions and inputs, etc. Ultimately, if you look into that of the currencies, either they can go up or come down. These are all the only 2 possibilities. So in that possibilities, which possibility has got a higher probability, we need to find out. And in that higher probability, and what reasons, because we always read a reason to understand or believe it. So the reason, we have to follow the hidden agenda of the players. How to identify the hidden agenda of the players? By following the type of moves they are doing it. Because in the financial market, if somebody wants to make money, that money cannot multiply by itself. Suppose you take $10 and just put it in a pocket and in a purse. After about 10 days, you expect $20 to be there. It is not going to be, because it does not multiply by that way. And normally what we do is we invest it, and the money is converted into effort, and the effort earns $20 for you. But in the financial market, people want the money to multiply. And if they want the money to multiply, just like a tree wherein you can see that money grows, the only way is act cunningly. So what is the cunning way? Tell all the entire world, follow technical analysis and fundamental analysis, but they don't follow that. And they simply follow this market move and the market timings. So if you want to read the players' intentions, then we need to follow their timings, their type of moves, and their tool. Their tool is nothing but the price action coming from that of the interbank treasury. They have so many analysts, and every bank will come across so many analysts. If we interact with those analysts and say that, okay, how is your job going? You'll say, no, I've done a lot of wrong calls, still they are retaining me. That's what they will say, because they want the technical analysis to be done for the sake of others, not for themselves. So anyhow, so these are all the 3 trades I envisaged, and now we have got yen position, and it is made for the dip, and also euro made a small gain, but still not 40 pips, so we'll wait for it. And GBP has made a dip, The data is by 10 GMT. Before that, they are making a dip again. So I will not be here up to 10 GMT. So anyhow, I kept the order. I'll come back to you by 14 GMT and explain to you how exactly what happened to these positions, what I envisaged. So is there any questions? Okay. So there is no question as such. So I'll go to the next slide. So I'll come back and present tracking the forex market together webinar part 2, and that will be from 14 to 14:45 GMT. I'll also explain to you what happened to the trades and also refer to that of the live market put page and find how exactly the market is making further moves during that of the late European and early part of the US sessions. So kindly track the market from 9:45 up to 14 GMT and come back. We will discuss further. I'll try to give you some more interesting information pertaining to this market. Thank you one and all. See you by 14 GMT.